We're a third of the way through earnings season, and we might have a little problem. Time for insight and action. Let me show you specifically what we're talking about. The first quarter report card thus far versus forecast. Earnings look good, right? In other words, the average report is exceeding the analyst forecast by 4.7%. Earnings forecast. But look what's happening on sales. All right, that's the top line, down 0.5%. Not good. You want to see green on both of these. That means that's engineered type earnings, right, as opposed to money coming through the front door. Big difference there. That's a concern. Drill a little deeper and let me show you who's missing and who's beating. Energy, materials, healthcare, technology, and industrials missing the target. All right, you're having earnings shortfalls, you're having sales shortfalls. However, look who is on target. Financials, the banks, and consumers. Consumers, isn't it amazing? 56% of this economy based on consumer spending. Some people say 70, that's because if you add in healthcare. So 56% of this economy based on consumer spending, and that's what's on target. Let's focus on consumers. And as a matter of fact, if we look at all the consumer stocks in the S&P 500, we have found 12, just 12, where you have, in the past several weeks, the estimates rising ahead of earnings. These companies have yet to report, and their earnings are still coming out. Beam, DirecTV, Expedia, Starwood, Macy's, Marriott, Knoll Rubbermaid, News Corp, Safeway, Molson, TripAdvisor, and of course VF Corp, if you like those Timberland hiking boots. So these are where the estimates are rising. They're about to report earnings in the next couple of weeks. And finally, Trish, take a look at this. Here's the key. This group of 12 stocks, consumer stocks with rising estimates, up 18.6% versus the S&P 500, up only 10.7%. Go where you have the growth, and amazingly, it's still in the consumer sector.